Mr. Trudeau of Canada, and we had a good talk in the morning, but I did ask him a couple of questions like, banks aren't allowed to do business in Canada. Canada is very tough.
Good evening, and tonight we take an in-depth look at how Trump's latest trade decision could reshape the global economy, potentially raising inflation, disrupting supply chains, and altering the financial landscape for millions of Americans. Over the weekend, President Trump signed an executive order imposing a 25% tariff on imports from Canada and Mexico and a 10% tariff on Chinese goods. The move, aimed at protecting American industries and jobs, triggered an immediate sell-off across major stock indices. By Monday morning, panic set in as investors reacted to fears of higher costs, economic slowdown, and possible retaliation from affected countries. The Dow Jones plummeted 665 points, or 1.5%, at its lowest. The S&P 500 dropped 0.76%, while the tech-heavy Nasdaq took a 1.2% hit. However, in a sudden turn of events, Trump later paused the Mexico tariffs for 1 month after a last-minute conversation with Mexico's President Claudia Sheinbaum. This decision helped the market recover some losses, but uncertainty remains. The impact of Trump's tariff bombshell wasn't just felt in the US, it sent shockwaves across the globe. In Mexico, the iShares MSCI Mexico ETF, which tracks Mexican stocks, initially fell but rebounded over 2% after the tariff pause announcement. Canada, on the other hand, took a major hit. The 5 largest Canadian banks, which are heavily reliant on US trade, saw sharp declines in early trading. Stocks of the Royal Bank of Canada, TD Bank, and Bank of Montreal plummeted by as much as 8% in early Monday trading. In Asia, the Chinese yuan weakened to a 5-week low against the US dollar. Meanwhile, European markets opened in the red, with auto and manufacturing stocks suffering the worst losses. Many leading economists believe these tariffs could push US inflation higher, with Morgan Stanley estimating a 0.3% to 0.6% increase in prices over the next 4 months. If fully implemented, the tariffs could also slow US GDP growth by 0.7% to 1.1%, potentially weakening economic expansion. What does this mean for you, the average American? Higher prices on everyday goods like cars, electronics, and groceries. Increased costs for businesses, which may lead to layoffs or wage stagnation. A volatile stock market, putting retirement funds and 401 investments at risk. Major financial institutions like Goldman Sachs have warned that if these tariffs remain in place, corporate earnings could drop by 2% to 3%, causing long-term valuation declines in the US equity market. Beyond the economic impact, this move could have major political consequences. Democrats have criticized Trump for jeopardizing the economy during an already fragile period of recovery. Republicans are divided. Some support the move as a strategy to force better trade deals, while others worry about its impact on American businesses. Global leaders are retaliating, with Canada's Prime Minister Justin Trudeau imposing his own tariffs on $155 billion worth of US goods, including beer, fruits, and clothing. China has filed a lawsuit with the World Trade Organization, calling Trump's move a violation of global trade agreements. With the 2025 election cycle heating up, this decision could play a key role in shaping voter sentiment. But is this truly an economic war, or just another one of Trump's famous negotiation tactics? Some analysts believe Trump is using tariffs as a bargaining chip rather than a long-term economic policy. Thierry Wisman, a top strategist at Macquarie, believes Trump will eventually walk back tariffs after securing concessions from US trade partners. In a post on Truth Social, Trump himself hinted at this, saying, "Negotiations for a more permanent deal will continue throughout the month." If history is any indication, we saw a similar pattern in 2018, when Trump imposed tariffs, only to later strike trade deals that softened the economic blow. Despite the initial chaos, some sectors managed to stay afloat on Monday. Consumer staples and healthcare stocks gained around 0.5%. Energy and utility stocks added 0.4%. However, technology stocks and automakers felt the worst of it, as investors braced for higher costs of imported components. So what happens next? If Trump follows through with tariffs on Europe, expect another market downturn. If negotiations with Mexico succeed, the Dow could see a strong rebound in the coming weeks. Investors are watching closely for Federal Reserve intervention. If inflation spikes, rate cuts could be delayed. One thing is certain, market volatility is here to stay. This is a developing story, and we will continue to track every update as it unfolds. What do you think? Are Trump's tariffs a smart negotiating tool, or a reckless move that could crash the economy? Let us know in the comments below. For now, this has been GRAND-NÈGRE reporting. Stay informed, stay prepared, and as always, follow the money. Thanks for watching, and we'll see you next time.
Mr. Trudeau of Canada, and we had a good talk in the morning, but I did ask him a couple of questions like, banks aren't allowed to do business in Canada. Canada is very tough. Canada is very, we're not treated well by Canada, and we have to be treated well. Banks are not, as an example, allowed. Did you know that American banks are not allowed to do business in Canada? Can you believe that? And that's one of many things, and we talked about it, and I think we'll win most of the subjects. But for some reason, a lot of things have been very unfair with Canada. I noticed that in the first term. You deal with people, and after a while you begin to realize, like you learn that Larry Ellison's very tough to do business with, okay? He's a very tough guy. I mean, I'm sure you're shocked to hear that. But Canada is very tough. They're very, very tough to do business with. And we can't let them take advantage of the U.S. They don't take our agricultural product for the most part. They don't take our cars. They make cars, but they basically don't take our cars. And we don't need, and look, I think we're going to have another good conversation today. We're actually speaking at 3 o'clock again. But we don't need them to make our cars. We don't need them to give us lumber. We don't need them for agricultural products because we have all the agriculture we need. They don't take our agricultural product for the most part, our milk and dairy, etc. A little bit they do, but not much. We take theirs. And as far as cars are concerned, they took in a big percentage, almost 19% of the market. And I wouldn't mind making our cars in the United States, so we have a problem there. I'd like to make our cars in the US. We don't need Canada to make our cars. With that being said, we're going to have another call at 3 o'clock.